Hi everyone, Adam Hewison coming to you from the digital studios of Market Club. Welcome to the 1st of August and a whole new month of trading. Well, July has come and gone. It's been a pretty good month. Or ended the month, I should say, on a very negative note when everybody wanted to go out the door at the same time. When that happens, people just sell everything indiscriminately. And I think that sometimes it offers great opportunities to traders who are alert and looking at the big picture. So we're looking at gold. So what's been happening to gold? Well, first of all, gold had a nice move up from the lows in early June, right here. You can see right here. And if we just put that in, you can see right here, and then we moved up to the highs here. Then we've come back down. So we've had the pullback down. The question is, what does this measure in a Fibonacci term? So if we clear the screen, I'll show you. First of all, we're going to go to our Fibonacci tool, which is right here. And you click that, it puts a little yellow box on the left hand side, and I'm going to draw click from the highs and drag it down to the lows. And as you can see, we've hit a Fibonacci number today, which is a 61.8% Fibonacci retracement. That is normally a very good level for this market to hold. So I think the 1280 level should be a very good area for gold, spot gold, to hold. Now, as you can see, the symmetry of this is kind of pretty. If you look at the lows right here, and the lows here, and the lows here, we sort of get into this rhythm in gold. Potentially this could be an enormous base for gold right here. And if we move over these levels, then we'll be off to the races to much, much higher levels. But we haven't gotten there yet. We need to do a little bit of things, but we're buying in weakness here. We're expecting this level here on the MACD, which is this indicator right here, to turn around and be positive. You may want to be a little bit patient, wait for next week. But if we see this market close over yesterday's highs, now yesterday's highs they were not that high. I think around 3. Yesterday's high we had at 1297.35 on the spot. Now at 1296 right now, and the potential is we could maybe going over that level and closing. If it closes over that level, I think we're in good shape, and this 61.8% retracement in gold is going to hold. So watch that very, very carefully. We're looking at Apple now. Apple's obviously very, very strong. Went back close to its all-time high around 700. Remember, it was a 7-for-1 split, so 100 equals 700. And if we put our Fibonacci numbers in here, you can see just from the highs, click once, drag down to the lows right here, the recent lows, and you can see we hit that level today. Right around the 95 level was a Fibonacci retracement, a 61.8% retracement. I think we'll see Apple challenge the highs and potentially even go higher than that. So we'll have to see. But if we take this out to, let's say, a max, you can see there's the previous high. $100 equals 700. So if we go over that, I think there's a good chance we'll see Apple do better. It's got some new rollouts, a new iPhone 6 coming out in September, a new potential iWatch coming out. Lots of potentially new things that are going to generate large amounts of cash for this company. Looking at a 3-month chart of Tesla, a couple of things I want to bring to your attention on Tesla. One, obviously we're bullish. All of our trade triangles are positive. The other thing that's interesting here is you have turned around on the MACD, which is right here. It just turned positive, meaning the trend is going up, much like it did right here when we made that cross. You see the cross here, and then we cross back here, which is up here somewhere. So I think we just made the turn. So I think potentially for Tesla to go higher to the $300 level is not out of the question. This is a dynamic company doing some dynamic things with a very dynamic founder and charismatic leader, Elon Musk. So watch this very, very carefully, and I think we'll see this market do better. If we put our trade triangles in, you'll see they're all green, strong trend. You want to be in Tesla. We're looking at Netflix. It's not the flavor of the month for internet stocks right now. You can see it's got a red weekly trade triangle and a green monthly trade triangle. We want to watch this market very carefully. It's getting back to the point where it's getting very oversold. Not to say I can't go lower, but we want to watch this for some sort of reversal. We still like the longer term prospects for this stock, and we think it can go up to $500 a share, but we want to see some confirmation that it is making a turn. Amazon's a similar situation. We like Amazon longer term. The monthly is still positive, but we just made new lows today, which is not a good sign. But generally speaking, we think this is where the market's going to probably find some support. We thought it was going to be a little higher, but it wasn't that case. So let's just move our Fibonacci tool and see where the support should have come in based on Fibonacci. Should have been right around, I think it's about the 313 level. and it just didn't come in. So I think we have to watch that very carefully. So let me just move. Again, it's all going to depend on where Amazon closes today, and it certainly just doesn't look like it's going to close very, very well. So let's see, put that on our watch list for next week to take a look, but see if we get some of these triangles turning green. But until then, I think maybe the sideline's the best position for now. Here's Adam Hewison, where it's the 1st of August. Lots of opportunities this month. Have a great weekend, everybody, and successful trading for the month of August. I'll be talking to you on Monday. Have a great weekend.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.